Good afternoon, Mr. Jola.
Yeah, good afternoon, Inka. How are you doing today?
Very well,
Good
thanks.
afternoon, everyone.
So you can share your slide while we wait for others to join us. We're expecting close to 500 participants.
Mhm.
So once it's 12:25, you can start the class, sir. Thank you. Okay. Hello, ma. All right, welcome back everyone to the second session on this free webinar. And the faculty is in the person of Mr. Larry Ojola. He is Director of Operation and is certified trainer with UNDP. Sir, you have the floor. You can start the class, sir.
Thank you very much, Minka, and thanks so much to the College of Insurance and Financial Management for this opportunity that's given to me to facilitate this session. And I want to say good afternoon to everyone on the call. It's my pleasure to be with you to share a little bit of my understanding on the latest kid on the block in our industry, the Nigerian Insurance Industry Reform Act 2025. This session is going to be for 2 hours, and it's titled The Classification of Insurance Business under NIRA. At the end of this session, every participant is expected to be able to demonstrate a clear understanding of the impact of this new law on insurance classification, be able to apply ethical and professional conduct within defined licensing boundaries, and also be able to clearly differentiate between all classes of insurance business under NIRA. As Yinka said, my name is Larry Ojola. I'm privileged to be the Director of Operations at the Nigerian Insurance Association, which I'm sure every one of you know. The NIA is the umbrella body of all insurance and reinsurance companies in Nigeria. This session will go through just 5 key things. I'll do some brief introduction, which of course may include, I may repeat some of the things that the earlier facilitator has said, and then we look at the classes of insurance under NIRA, which are just 3 main classes now. We have the life insurance, we have non-life, and then the miscellaneous and digital inclusion products. Then we look at the licensing boundaries, the key implications for NIRA, and then we'll conclude. The introduction. As you all know, every one of you will agree with me, except if there are some people that might have contrary opinion, that our sector has long been recognized as underperforming in relation to the potentials that we have as an industry. When you look at our population that has over 200 million people, with an adult population in excess of 130 million and a growing middle class, our insurance penetration is still very, very low, contributing below 1% to GDP. These are contributions when you compare it to the global average, which is what we have in other countries of the world. It is very, very far behind. Even when you look at Africa, it's still nothing to write home about. But NIRA, which is signed into law, July last year, seeks to address this structural weakness, restore public confidence, and also position our industry as a driver of economic resilience and, of course, growth. But before I go on, I think it's also important that we also look at the background and the rationale for reforms, because when people talk about reforms, there are some underlying, assumptions or factors that leads to why, bills or actions are taken in terms of reformation, which is critical to address, certain areas. Now, before NIRA, we have a lot of laws also in insurance that are, fragmented. And these laws created a lot of inconsistencies. It weakened our investors' confidence and it slowed innovation. You look at our industry, particularly in the financial services sector, you realize that we are still not as competitive as what you have in the banking sector, in the capital markets, and the likes. But this new act consolidates these statutes, all those statutes that we have before now, into a unified framework and aligned it with global best practices. The reform, as is sent to see, is expected to drive, growth in terms of our penetration rates to make it, to grow higher than what we have currently. Because when you look at, an average person in Nigeria, it's just less than 2% of the entire population that have one form of insurance policy. So if when you say less than 2%, what it means is that we still have, what we have in terms of policy holders is less than 5 million, which of course is nothing to write home about. And of course, the insurance companies too that are providing these services, they also face capital inadequacy, that fall short of international solvency standards. But an interesting thing is the rapid rise of insurtech, which has highlighted the opportunities and the regulatory gaps, and this underscores the need for modernized legal structures. So collectively, these challenges made comprehensive reform, necessary. And this leads to this enactment of this law to strengthen our resilience and restore confidence in our sector. Now, 4 key objectives that I believe NIRA seeks to achieve. And one of it is to strengthen regulation and supervision. The idea is to strengthen oversight and have stricter licensing that will enhance governance for accountability and, of course, transparency. And what do I mean by this? The Act seeks to repeal those outdated statutes and replaces them with a single comprehensive framework that governs both insurance and reinsurance business. By consolidating these laws into that one unified structure, the NIRA has been able to eliminate inconsistencies, streamline regulations, and establish a clearer and more coherent foundation for our industry's oversight and growth. The law also, to an extent, introduces more rigorous licensing requirements for the players in the industry, like the insurers, the brokers, agents like you as well, and of course, the reinsurance companies. ensuring that, most of these, players, are well capitalized and have competent operators that are permitted to participate in the insurance market. Furthermore, I also say that it strengthens oversight of principal officers by establishing clear qualification criteria that is designed to uphold professionalism and integrity across the industry. So when you look at all this breakdown, what it seems to achieve at the end of the day is that all these things seeks, to elevate our standards, foster accountability, and build greater confidence in the Nigerian insurance sector. And more importantly, which is something we all have been hearing about, is the capital requirement, which the Act, significantly raised the minimum capital thresholds. This is a measure that is designed to enhance solvency and also safeguard the interests of policyholders by ensuring that the insurance companies maintain stronger financial foundations. This, of course, will encourage mergers and acquisitions among smaller firms as a practical pathway to meeting this requirement. Because when you look at the time frame that has been given, I overheard someone, the last facilitator talking about the fact that NIRA came into full blown by July 31st, 2025. And within the law, with the insurance companies are given just 1 year, to meet up these new capital thresholds. Now, a lot of companies might not be able to raise that capital either through private placements or through the capital markets, but it's an opportunity for them, to merge. It's also for the bigger ones to also be able to acquire those smaller ones in order for them to be able to consolidate. And this will create more resilience and make our insurance companies to be much more competitive within the industry. Another objective, which I also want us to also appreciate, is the fact that the Act seeks to guarantee policyholder protection, transparency, and solvency assurances. When you look at the provisions of the Act, NIRA seeks to establish mandatory timelines for the settlement of claims, which is critical for every one of us to take note, because the reason why we're in business, as they will say, is for us to be able to settle claims, because that is where trust is built. So there are service standards which the new law has put in place, that makes it mandatory for compliance by operators. It clearly ensures that policyholders receive prompt and fair compensation. So it's not just even you paying in good time. It ensures that you are paid what is actually due to you. And it also reinforces accountability. It introduces penalties for delayed or unjust practices. So the issue where there are unnecessary delays in terms of settlement is not going to be a thing of the past. And this is to discourage inefficiency and misconduct that has been, been within our industry in the past. Furthermore, the Act also created an independent insurance ombudsman, which is to provide a formal mechanism for dispute resolution that will offer consumers of insurance reliably to address grievances and strengthen overall trust within the insurance system. Also, the third objective, which I think is also extremely important, is the issue of innovation and digital inclusion. The Act formally recognizes digital platforms. We've been having digital platforms before, but this is now being recognized under the law. So we now have digital platforms, insurtech firms, as legitimate participants within the insurance ecosystem, thereby validating their role in expanding insurance access and also driving innovation across the sector. And what this seeks to mean is that we are now having an improvement in our channels of distribution, because this one will give us a wider reach to reach, the underserved within the insurance ecosystem. It also actively promotes the use of electronic channels for policy issuance and claim processing. So when insurance companies are issuing policies or there's there's an issue for claims to be paid, ordinarily buyers of insurance can just go on their portal and just lodge in their claims, go through the necessary process. Payments also done without even stepping, your foot outside, your homes or your offices. And this is to ensure greater efficiency, transparency, and convenience for both the insurers and, of course, the policyholders. These provisions, I'm sure you agree with me that it signals a decisive shift towards a more modern technology-driven insurance industry in Nigeria. Our industry, I think, has been ripe for this all these years, but it's just that we've not been able to take the bull by the horn. Now, this act has given us that opportunity to be able to do so. And again, too, is what I could also call market development, because the act introduces targeted incentives to encourage the growth of microinsurance and agricultural insurance with the aim of expanding coverage in the underserved sectors and providing financial protection to the vulnerable populations, which we have particularly in the rural areas where we have a lot of people that are not into the formal business that we do in major cities, where the income is extremely low, so that they are also taken into that web of insurance. It also promotes the adoption of compulsory insurance schemes in critical areas such as health, transport, construction, ensuring that essential industry operates with adequate safeguards while broadening the reach and impact of insurance across the economy of our country. And then lastly is the issue of, clearly delineating the licensing boundaries that we have, for the players within the industry. The act is to enforce financial discipline and operational boundaries, setting those minimum capital thresholds, which of course we will talk much later in the course of this presentation. It also introduces the penalties for unlicensed operations, for all those people that are setting up businesses that are not known, to law, but they are cashing out, from our industry. As at about 2-3 years ago, when we did some analysis at the Nigerian Insurance Association, we discovered that on motor class of insurance alone, which is the compulsory third party, these non-state actors that are not licensed to transact business at the time were cashing out to the tune of over 100 billion naira. And that, you can imagine how massive that is for our industry, to be losing. And you can also look at what could have happened in terms of the increase in all of this when you also look at it. This has become mandatory more, and the law enforcement agents are also, clearly aligned, compliance of that motor class. Then it also, like I said, introduces penalties for unlicensed operations, thereby safeguarding integrity, promoting specialization, and ensuring solvency, the solvency of our industry. But let's look at the classes of insurance under NIRA. There are 3 main classes. As I said earlier, we have life, we have non-life, and of course, we have miscellaneous and digital inclusion products. We'll be looking at each of these main categories, one after the other, and then we'll discuss this briefly, just for us to refresh, our memory, and then also align all that we know with regards to the provision of, the new law. For individual life, this covers personal policies, such as, term insurance, whole life insurance, various endowment plans that we have, which have investment and components which are designed to provide financial security for individuals and families. This comes in various forms. It could be basically for protection against debt. It could also be for investment purposes or for both, depending on which one we seek to want to, of course, our customers wants to have. Then we also have the group life, which applies to the employer-sponsored or collective arrangements that offers life cover to employees working in an organization or members of an organization under a single contract. People, maybe in an association, who come together to say they want to have a group life cover for themselves, and it comes with very benefits that covers death, covers funeral expenses, that covers if there's accidents, injuries and all that. Then, of course, too, is annuities, which is a structured product that provide regular income, to policyholders, particularly retirees, and this is to ensure that there's financial stability for those ones after their post-employment years. This is one area that is of almost concern to me, because this is supposed to be part of our insurance industry. We will increase, and of course, but then we did not lose sight of the benefit of that product, which is to provide financial stability during post-employment years. And then we also have the health-linked products, which are products that combines life insurance with health-related benefits, that offers hybrid that addresses mortality and, of course, medical risk. This are products that is basically being offered mostly by HMOs that we have. And importantly, too, which I also don't want us to lose sight of, because one of the key objectives which we talked about is the fact that we need to grow and develop the market, of which NIRA has made provisions in that regard. And it's for us as an industry and as a player to see how we can develop that market that relates to the underserved. And that is where the micro life comes in. This one focuses on making available affordable and simplified policies that is tailored to low-income earners, and the underserved population, particularly those, within our rural areas. And this is to promote financial inclusion and give a wider access to life insurance protection. Then we'll move on to the non-life insurance class. All those products are actually listed, within the law, but I, summarize them to 5 key classes, which of course, they all all fall on any of those products that you can think of within insurance fall under these main classes when you're talking about general insurance. And the first there is on property insurance, which provides coverage against loss or damage to physical assets, such as our buildings, our homes, and commercial properties. It includes protection against fire, burglary, and other hazards that threaten real estate and personal belongings. But more importantly, under this section is the provisions that we have in section 75 and that of section 76. I will advise each and every one of us to try as much as possible, if we don't have it now, to get a copy of NIRA 2025. We can get the gazetted copy from the website of the National Insurance Commission. Now, what does this section 75 and 76 talks about? It makes the insurance makes compulsory insurance on buildings under constructions and public buildings, which we can call occupiers liability. So the issue of when you are putting up a building anywhere in the country, be it in the city or urban areas or within our respective villages, we are expected to have insurance to protect those in that site. Okay. All right. And then for section 76(2), it talks about, even buildings that have been completed that are now being, inhabited by people, because people will be coming in and going out, third party collapse could cause, bodily injury or even death, as the case may be, of which each liability may arise. And we've witnessed quite a lot of this all across the country, most especially in Lagos, where there are available statistics that indicates to how many of these hazards that we have experienced as a state and as a country in the last few years. And there's need for the government of the day to be able to rise up to this occasion and address all those issues. And then again, go through to the motor insurance, which is also one of the compulsory insurance policies that we have. And this simply covers against risk such as accident, theft, and third-party liabilities. We do know that it includes compulsory third-party motor insurance as well as comprehensive policy that protects both the vehicle and the owner. And one interesting thing too, which I'm sure we're also familiar with now, but I need to reiterate it, is the provision of automatic ECOWAS brown card. This is not just for the compulsory aspect of the motor third party, but for every motor insurance certificate that is issued in Nigeria must have automatic brown card. So it means when we sell our products, either it is third party, that's 15,000 for private motor or comprehensive or whatever, it must come with that. And what that seeks to achieve is to ensure that any liability that may arise that falls under what risk, taken care of. For instance, because some of us might, be thinking, okay, I have a vehicle, my customer has a vehicle, he doesn't travel outside Nigeria, and there's no likelihood that he's going to travel outside Nigeria. But then what if a vehicle from the West African sub-region, let's say from Togo, comes into Nigeria, and then your customer now drives his own vehicle, into that vehicle, causing an accident? Of course, liability has arisen, and there has to be compensation, for the injured party. Then again, we go to marine and aviation. This class seeks to address risk that is associated with transportation and logistics, and it covers cargo, oil, and freight, while the aviation insurance protects aircrafts, passengers, and liabilities arising from air travel. This is what we've always have in the Insurance Act of NIRA, but there is another section that was introduced. Businesses, we know people bringing in goods through the sea, they come in with containers. And before NIRA, what is expected is that those people that owns, because it's not the importer that owns the container, it's the ship owner. And loss or damage to it, result in huge liability. So the ship owners usually take deposits, that ranges, between 200,000 and the likes, depending on the size of those containers. And over the years, government realized that there's been a lot of what we can call premium flight insurance or capital flights, from the government side, as the case may be, because you can imagine the number of containers that comes into this country on a daily basis. if our available statistics that was even given to us, by the Shippers Council also indicates that over 20,000 containers are always in circulation, in movement across the country at any particular point in time. So which means on a daily basis, 20,000 containers. So you can imagine you have 20,000 containers and just multiply it by 200,000 and imagine how much Nigeria is paying out to the ship owners on all this. Although in some situations, part of the deposit is being returned if there are no damages, to the container, or it is even returned in good time, as is expected. But in most instances, that's not the case. But government has deemed it fit to make, instead of importers to pay for deposit, they are now to pay insurance. And that addresses two key things. One, it removes the issue of a deposit and also lowers the amount that is involved, because even though we've not been able to arrive at the premium that would be on this container insurance, but I can tell you that it's not going to be as high as the 200,000 that, the importers have been paying in time past. So that will help us as an industry to grow, because that is much more business for us. And it will also help the government of the day to also retain, a lot of FX, for our country, and by implication, it will boost our reserves and also, boost our ability to have a higher value, for our naira. Then we also go to another classification, which is the energy and engineering class under non-life. This particular product is tailored to address Nigeria's industrial and infrastructural sectors. It is to provide coverage for oil and gas operations, power generation, construction projects, engineering works, that safeguards against technical and operational risk. This is one of also, a major class of insurance business where about 20-25% of our insurance premium comes from afterlife in terms of contribution to the gross insurance premium on an annual basis. But an interesting thing too here is another opportunity which the law has also provided for the insurance industry. Here, it also makes insurance of petroleum and gas stations, and of course, products of, oil, gas, and petrol that are in transit. So it means that when you see all those tankers on the road, they are expected to have, insurance policies to cover all their, liabilities that may arise should there be an accident or any untoward development. And this is provided for in Section 78 of the Nigerian Insurance Industry Reform Act. And what that means is extension, more business for us as an industry, and also for you agents. I mean, you can imagine the number of, tankers that move, fuel from the depot to different filling stations across the country, that move also cooking gas and other kind of gas, to different areas across the country. All those trucks must have insurance. It is compulsory. Okay. And then we'll go to the last one, which now has to do with the miscellaneous classification and digital inclusion product class. There are 6 broad categories here, of which one of them is microinsurance, which also we are very much familiar with, and this is to provide low-cost, simplified insurance solutions. Oh, apologies, please. System threw me out. Okay. So were we? Okay. So apologies. The system threw me out. I hope you can hear me. I hope you can hear me. If you can hear me, please, can you please put a comment in the chat box if you can hear me?
Yes, so we can hear you. You're audible.
All right. Okay. Thank you. Okay, so I was talking about the miscellaneous and digital inclusion product classes, that there are 6 broad categories under this within the context of NERA. And one of them is microinsurance, which is actually to provide low cost and simplified insurance solutions that is tailored to meet the low-income individuals and the underserved in our communities that are predominantly in the rural areas. Its main goal is to expand the financial protection to those that are traditionally excluded from mainstream insurance. I said we have available statistics indicated that we have over 130 million adult population. When I say adult population, I mean people that are 18 years and above. Now, this 130, only less than 5 million actually have one form of insurance policy. So which means we have not even scratched the surface. We have, great potential, for business in our country. So, and if we are still scratching the surface, and by available statistics, our gross premium income for 2025 approaching about 2 trillion naira. You can imagine if we are able to double that figure, perhaps this year or in the coming year, in terms of even the 5 million that we're talking about, we're able to push the adult population to 10 million. You can imagine what it's going to be. But then, based on the National Financial Inclusion Strategy of the federal government of Nigeria, of which insurance is part of, we are expected to have at least 40% of that adult population having one form of insurance. So which means we are supposed to have even attained 52 million people having one form of insurance. And this is a challenge to us as agents, that we have not been able to meet that threshold. This is to provoke our thought to action. The businesses are out there. It's just for us to be able to think out of the box and see how we can tap into those potentials. Another classification too is the TACAFO. The TACAFO is more or less, tailor-made, towards, it's faith-based, which introduces Sharia-compliant insurance products that offers risk-sharing arrangements that, apply with Islamic principles. This is just, to also encourage people, in the other faith, that, because there are some things we do in a conventional insurance, which, of course, is not in alignment with the provisions of, let's say the Holy Quran and the Sunnah of the Prophets. But because, we are also trying as much as possible to bring everyone into the insurance ecosystem. That is why this TACAFO was also, provided for, so that they can take care of the interests of those people that are aligned to their Islamic faith and still want to do one form of insurance or the other. Now we've talked about the digital insurance, where we are now leveraging on technology, to deliver insurance products through various kind of technological equipment that we have at our disposal, such as the mobile apps, the online portals that every insurance companies have built. I understand some insurance brokers too are also trying to build, portals, and of course other digital channels, which the insurtechs are also, trying to establish, their presence into. This is also a form of how we can actually also, grow the market and reach, the underserved within the insurance ecosystem. These platforms is to enhance accessibility, efficiency, and transparency in policy purchase and of course managing, because when you are doing all these things online real time, you're able to see how the transaction flows, just like banking mobile apps. I'm sure most of us here can't remember the last time they visited their respective banks, because do you really need to visit your bank to be able to do any transaction? Even in the businesses that you do, I mean, you sell an insurance product, you may I decide to buy, payment is, made directly to the account of the insurance companies. Commissions are paid. And even when you look at some of those things like the NIP and the NID that is under the auspices of the Nigerian Insurance Association, which has been seamless. You buy an insurance, a motor insurance on the NIP platform, automatically goes on the NID from anywhere in the world. Verification of the genuineness of your certificate can just be verified online real time without leaving your comfort zone in addressing this thing. So there are a lot of things that NIRA has provided for us under this whole arrangement, which I believe there's need for us to not just take cognizance of, but to also apply ourselves to the opportunities that the law has provided for us. Another classification too has to do with the cyber risk, which addresses the growing threats of digital vulnerabilities, that is associated with those technologies that we are putting up. Because we also know that anything that is man-made is not even perfect. There are people that, apart from the fact that, what we call act of God can happen, that can make all these platforms to become non-functional. And if it happens, you can imagine, the liability, the loss that may occur. For instance, the NID. If the NID goes down today, a lot of people will be affected, because when you buy your insurance product, when you buy your motor insurance certificates, and companies are not able to upload on the NID, and then you are caught, particularly in Lagos, that comes with a fine of 20,000. So imagine if just 1,000 people are caught within the time frame that portal, went down. Just imagine how much, that would be at the end of the day. Or perhaps, some of our brothers too, at the other side, decide to hack our systems to cause us damage, or we're having data breaches and the likes. These are risks that could happen, could crystallize. So there's need for us to, have insurances, to protect us against, these liabilities that may arise. Then another one too, which NIRA also introduces, is the usage-based insurance. And this links premiums to the actual consumer behavior. It recognizes the use of telematics, which these are kind of technology that is, inserted in cars, which is to, that takes record of driving patterns of the driver, lifestyle of choices as the case may be. So it will give that that accurate data that will also help insurance company to be able to underwrite insurance specifically, which will, promote some level of fairness, and also, grant some form of incentives, because of the fact that, someone has a better moral hazard, than others. Somebody that is driving, that maintains speed limits, obey all traffic instructions and the likes. You can't compare such person, to the that is doing otherwise. The risk, kind of different. And what we've been doing before in the insurance industry is just to have some form of, blanket rates. You say comprehensive now, then they tell you, okay, it's 5%. And so whether the person's moral hazard is great or otherwise, pays the same 5% with somebody that, his own moral hazard is questionable. So, but this time around, there's going to be some level of fairness, people being rated based on the quality of risk they are bringing into the pool. And then lastly is the parametric insurance. This insurance provides payouts that is based on predefined triggers, such as weather events, or natural disasters rather than the traditional claims assessment. And this is usually, associated with weather-related, activities, particularly in terms of agri insurance. The model is to ensure that you have a faster compensation and greater resilience for our businesses and individuals that are facing catastrophic risk within our country. So, those are the key, those are the three major classes of insurance products which we have under NIRA. And I will quickly also go into sharing my thoughts on the licensing boundaries that we have within the provision of the Nigerian Insurance Industry Reform Act 2025. You will notice that I keep repeating, the full meaning of that acronym, because I saw some of us, in the comment on the chat box, requesting for the full meaning of NIRA. And I say it again, the Nigerian Insurance Industry Reform Act 2025. So 6 things that are considered that we should, speak on in terms of the licensing boundaries that we have within the context of the Act. And the first one there is on specialization requirements, which requires that insurers are expected to focus on a single line of business, which is either you are a life company or a general company or a reinsurance company, rather than operating on multiple categories, which you can say like having a composite license. Yes, we do still have some companies that have composite license, but we'll get to that in the course of this presentation. The reason here is for us to align ourselves to global, best standards, and thereby, strengthen specialization and underwriting discipline. This, in a whole lot, is to reduce systemic risk and prevent conflict of interest by ensuring that liabilities in one sector cannot undermine another sector, which is one of the things that has affected operators within our industry, at least in the past. And that's why some companies do fail. You would see situations whereby maybe it's a composite company, the life arm of it is not doing so well, but they now have to take money from the general business side, to fund the life arm, or vice versa. This is not supposed to be the case, and that is why the law has now gone a step further to ensure that clarity of role is defined and you are licensed to just practice that line of business that you have been given license on, which of course will ensure, specialization. So you now begin to have professionals that will be noted. Basically, okay, if you're in general business, they know that, okay, this is a non-life person, or this is a life person, or this is a reinsurer, as the case may be. Then again, it's a capital requirement, which I've made mention of, and it's what I believe every one of us is familiar with now. With the increase in the capital requirements, for life, you have to now do 10 billion, you must have 10 billion, and for non-life, 15 billion, and then, 35 billion for reinsurance. I've said before, there's no more composite insurance. So it's either you're a life company or a general insurance company, and of course, maybe a reinsurance company. Now, but I also want us to take note of this, that this is the minimum capital requirement. It does not mean that it's just a cast in stone. Once you have 10 billion for life, then you can do all sorts, because there's also another leg to it, which is the risk-based capital. When you look through section 15 of that act, that's where it talks about this capital requirement, and you go to subsection 2, which talks about the aspect that has to do with risk-based capital. because whatever businesses that you are doing, you must have that sufficient capital to be able to fund that risk should loss crystallizes. For instance, you won't expect a company that before the issue of 10 billion, let's say a company that just have a minimum share capital of 3 billion, which used to be under the Insurance Act, and is assuming risk, not against not against the value of his net account, which is the shareholders fund. Maybe the shareholders fund is about 3 billion and is taking risk of about 10 billion. We are housing that in his books. This is not going to be allowed. So NICOM 2 or the law will also take special interest on the fact that you must also be able to meet that minimum, that risk-based capital if you are going to do more than what your 10 billion or your 15 or 35 billion naira would do, as the case may be. Okay. And of course, there have been how they are calculating the risk-based capital. And the fact is, when calculating it, they look at some other risks, and they take some other things into consideration, like the market risk, the credit risk, the operational risk, which they have to apply, such as the capital charges on their assets and liabilities, to be able to determine what your risk capital base should be. But in all of this, it's just for us as an industry to be able to align ourselves to the aspiration of the government of the day, which is to grow the Nigerian economy to be a $1 trillion economy by 2030. The count has started. We have 5 years more to go. The issue now is how well are we prepared to contribute our own quota as an industry to ensure that that vision of $1 trillion economy is realized by the end of the year 2030. Then restrictions that we have is the issue of composite, of which the law now abolished composite licenses. So when you go through to section 6, subsection 4 of the Act, it clearly abolishes composite license and requires that existing insurance companies that are composite must split their licenses into life and general operations within 5 years. And that 5 years I started right from July 30, 2020. So which means all those composite companies that you know as of today will have 2030, under the operators, which are the insurers, the brokers, and the reinsurers. When you look at, section 5 and section 38, it talks about the licensing. What an insurance company is expected to have and how it should operate. So an insurance company cannot operate as a broker. So also a broker cannot operate as an insurance company. And likewise for reinsurance as well. This is to prohibit overlap of rules and also to reduce conflict of interest, strengthen accountability, and promote transparency across the insurance value chain. So everyone has a clear distinct role to play within the insurance value chain. Then again, we quickly look at the digital insurance category, which of course we will find in section 201 of the Act, which is to establish digital-only insurance, just like the way we have in banking, where we have different kinds of digital, banks like MoneyPoint, PalmPay, OPay, whatever pay that you have, now establish them as a distinct category. So which means we're now having competition. You don't now need to have brick and mortar to be able to operate as an insurance company and also to be able to take your own share of the market. So if you are big enough, you have, what it takes to meet the financial requirement, you can also go along this line and have, be a digital insurer that will operate, along these lines. But then there are strict standards that must be met, for the purpose of data integrity, cyber security, and of course, consumer protection. But I believe that this framework will promote innovation, will enable our insurtech startups to also be able to compete effectively with traditional insurers, under the watchful eyes of our regulator, the National Insurance Commission. And then lastly is the cross-border operations. Some of us may have been hearing of ACTA and all of that. Yes, insurance is an international business, but we are also growing now because of the opportunities that is also within the African region and of course to the global space. Yesterday, we got news that the Nigerian government has also signed economic partnership with UAE, of which the insurance industry was also part of the conversation when this whole thing was being put together. And what does that mean? What it means is that operators within our own insurance ecosystem can establish businesses in UAE, and of course to UAE too, they can come into Nigeria. But then it's just not just rocket science. There are, issues underlining it that has to prepare us, for us to be able to take those opportunities abroad. And also, there must be rules too, which have been set also by the Commission to protect us against the foreign influx of insurers that desire to establish local subsidiaries within our country. And we're going to see the likes of this happening from this year and of course into the near future, because Nigeria signed to that part of ACTA that makes Africa just one market. So which means you can be here in Nigeria and then you do your insurance in another country, or you can also be in Nigeria and then go and also offer insurance services to other countries. That could be movement of, people. That could also be, physical establishment, of structures within our country and outside of our country. So this whole thing is to just protect, policyholders and of course promote the principle of reciprocity within the international insurance market. So which means as UAE is coming into Nigeria is also expected to also be able to enjoy the same level of partnership when they have interest in establishing insurance businesses or having insurance businesses in the UAE as well. And so that's how it's going to be between Nigeria and all other countries within that ecosystem. So we'll quickly go through the key implications for NIRA vis-a-vis the classes of insurance, that we have under NIRA, as well as looking at the licensing boundaries that we just finished talking about. I'll look at those key implications from 4 different angles, and one is on for policyholders, which has to do with protection and diversity. Now, under protection, we talked about companies, having higher capital requirements and also working in line with the license that has been given to them. The critical thing here is to reduce the risk of insolvency. Companies have failed. We've heard of so many companies in the past, and of recent, Niger Insurance also just, joined those companies that have failed and they've lost their licenses. You can imagine the number of people, that have, doing business with Niger Insurance, and suddenly they woke up one day and the company is no more. So with NIRA, there's greater protection with the increase in the minimum capital requirement the risk-based capital that insurers too are expected to maintain at any particular point in time. And of course, the solvency standards, stricter, regulations and all of that. And the fact that, which is the bottom line, payment of claims, which needs not just to be done promptly, but it must be fair. What is due to the insured must be paid in good time. Again, too, is you now have diverse options, for policyholders to make options in terms of buying their products. They could go with the traditional insurance companies and still maintain running their insurances along those lines. Or they could also, go along with digital insurance by the time those ones come upstream with a lot of innovative products that will be easier for them to access, especially for those, that fall into the category of the underserved populations that are living, in rural areas that, coming into city, might be a Herculean task. As we all know, how many branches of insurance companies do we have in Nigeria? Based on the last count, I think we have less than 2,000 branches of insurance companies across the entire country. And even when you break it down in terms of regions, that's even when you look at the Northwest, hardly will you be able to even see have the presence of even up to 20 companies or 20 outlets within that space. And the same thing goes for our brokers and agents as well. But with the issue of InsurTech coming into that space with digitization and all of that, that will be a thing of the past, particularly for those, living within that environment. And then it will increase consumer confidence. When consumers also realize the fact that insurance companies, are well capitalized, it will engender transparency, it will foster their trust, and it also encourage them, to also incorporate insurance into their financial planning, because they know that if there's a loss, the insurance company will come in to, do the needful. And we've been doing it, but is it enough? That is where the challenge is. At least as at 2024, claims that the industry paid out is close to 600 billion. But then, because of one little complaint or the other, there are situations where, we still need to, firm up, whatever thing that we are doing to ensure that we are able to meet the expectation of policyholders. The second key implications is, to the insurance. Because what does NIRA mean to insurance? We now have stricter licensing rules. The specialization mandate is clear. Insurance companies can only focus on one line of business. It's either you are doing life or general, or you also want to be a reinsurer. It's only a reinsurer that can combine both businesses of life and general. And this is to sharpen expertise and limit diversification within a single entity, which have told us the issue of us, a company running two, licenses and one class of business is not doing well enough. And of course, you don't have to move money to another, which is not good enough. And it's not, allowed under the act. Then also is a restructuring pressure, which is basically for companies that are composite in nature, that are compelled to split their operations within the next 5 years. So, of course, this is going to cost them money. And it's also, when we say cost them money, in terms of breakup, maybe they have to have different buildings, different human resource now, because before you have just one single MD, now you're going to have two MDs. You have one board before, now you're going to have two boards. All these things has its own financial implications, which they must do within the next 5 years from the date of the law. But then I think it's best to just look at what the law seeks to achieve, which is to improve clarity and also accountability. Then the last one too under for insurance is the compliance body, which is of course a very tall order because of the time frame that was given to insurance companies to be able to capitalize. 12 months from the date of the law, and as we speak, about 6 months is off now. So you have just maybe about 6 months, 5 months and 2 more weeks to be able to meet that, capital, thresholds. It's going to be a tough and Herculean task, but then it's a thing that must be done. And we just need to encourage, insurance companies, those that are bigger, to be able to acquire those ones that are smaller and are willing to be acquired. And for those that are moderate that could man with other companies, they should, quickly do so that the long arm of the law will not catch up with them. Then another key implications is the market growth, which is one of the essence and the beauty of NERA 2025. One, the InsurTech Boost, which is giving a formal recognition of digital insurance providers, so people can now freely, walk into insurance space and provide, digital insurance, to help, product design, distribution of products, throughout, the populations that we have and under the strict guidance of the National Insurance Commission. And then with this, we're also going to have a wider reach, like we've talked about in terms of the digital platforms. So if you look at the mobile phones that we have, even statistics also shows that we have over, I think about 120 or 130 million smartphones. And even if not even smartphones, mobile phones generally, we have over 200 million of it in circulation. So you can just imagine, insurance being distributed along those products. I mean, that portal, we are able to reach as many people, millions of people as possible, which of course would drive the uptick. But there's a challenge for us as agents here, because this is competition, strong competition for us, which is a challenge for us to rethink our own style, our own strategy of having to go into the market. Yes, the market is still there. Every one of us can go in there and take advantage. But gradually, this digital space, might eventually take over the entire market. And before we know it, it might affect, our relevance, to some extent. Then efficiency gain, because it is technology driven, there will be, significant reduction in administrative overheads, because you now don't need to have brick and mortar to set up an office. That cost is gone. The cost of running the office in terms of power, in terms of putting staff and all of that is also, addressed or brought down significantly, because everything is automated. The computer does it, and with these days of AI, you need less people, to work. If you look at Google, you look at Facebook, you'll be shocked about the number of staff that they have. And these are platforms that billions of people use all over the world. If you just Google the number, I think whether Google or Facebook, the number I think is less than 100 or so that they have in their main office, and they are doing things. So the fourth one is to the regulator. This is more like a charge, because it's more of a stronger oversight, a responsibility that rests squarely on their shoulders. They now have more jobs to do in monitoring, all the players within the insurance value chain, the brokers, the underwriters, and the rich insurance, because they are to now, look at each segment of the market, in clear lines, and also must be effective. Then the issue of the cross-border safeguards, which I talked about in terms of the incursion that may come due to the cross-border operations that we are going to have. It is for them now to begin to, set rules that requires capital adequacy for expansion. So if you have a minimum capital, is that what you need for you to be able to expand to go into other countries? These are things that the regulator also needs to look at. And also for people, for people that are coming to the country to also establish business, what are those, financial implications that they also need to meet up with before they are able to establish their business? And finally, these key implications is for NICOM, which is a regulator, is the enhancement of their credibility, because if they are able to have a stronger oversight, which aligns with international best practice, this will position them as a more authoritative regulator in global insurance circle. So it's a challenge for them. But overall, I believe the act will reshape the insurance landscape in our country. It's going to make it to be much more resilient, transparent, and innovative. Policyholders will benefit more, from stronger protection and diversity of products, which they are also going to have opportunity to be able to, have varied choices, to choose from. But for insurance companies, they fix stricter or stabilizing rules that will help them to stabilize. The market will gain momentum through this digital inclusion, and by that, we are able to increase, our insurance penetration rate. Even if we are not able to achieve that for 40% now, but we should be able to move significantly in the next 1 or 2 years. And of course, our regulator being able to achieve a firmer oversight to safeguard system stability. So in conclusion, NIRA, for me, marks a decisive step. I think it's the best thing that has ever happened to our industry since insurance started operating more as a full-fledged industry in Nigeria. It has stepped in to modernize how we operate, how we run the sector, by enforcing specialization, raising those capital thresholds, which we've talked about extensively, and recognizing the digital insurance to be able to play actively within that space. It will help us reshape our industry, make it much more structured, give us the ability to be resilient and globally competitive. More players the opportunity in Nigeria is massive, and that is why some countries are trying to take advantage of coming in here. I gave that statistics. Over 130 million adult population. We have less than 5 million policyholders. You can see 125 million is still there that have not yet been harnessed into the insurance ecosystem. And the numbers are also bound to increase because population keep increasing, year on year. So, but it will position Nigeria as a regional hub for insurance excellence and align what we do with international best practice. On transparency and consumer trust, the fact that commercial licenses have been abolished and boundaries, are made clear and enforced between the players. When I say players now, I mean insurers, the brokers, and the reinsurance. Of course, it will increase transparency. Policyholders will benefit from this because there will be stronger solvency requirements with clear accountability, which of course will build or increase trust and confidence in our industry. This is one factor that I believe is essential if we must increase insurance penetration in our country, especially for those that are underserved. Apologies, this is digital disruptions. It's not in my character. Okay, so as I was saying, I was, speaking on innovation and acceptability. And like I said, because the law now formally recognizes digital insurance, this will encourage innovation at a level that may even be beyond our comprehension. Because we have a lot of insurtech startups that are competing and trying to find their foot with traditional insurance. Last year in November, in December, we had this innovation lab, which was a success. And I can tell you that in the next few months, we should be able to have, a portal, just like the way banks have NIPS for their own EKYC that they're able to generate BVN. We are also going to have something in that regard. And this is something that came up from that innovation lab. It's the first of the series that we did at the NIA. More will come this year and, of course, in the years ahead. So you can see that, opportunity for growth is there for us as an industry. It's only reckon on us to take advantage of this opportunity and be able to put ourselves, in the scheme of things where we too be able to feel fulfilled and realize our own personal objectives. And lastly, is the issue of stability and fair competition. With the minimum capital requirement that has been raised and stricter licensing rules, this will create a level playing field. It will ensure that only well-capitalized and compliant firms are able to operate within our space. If you're not good enough, you're not strong enough to operate, then you might just, simply cease to exist. And of course, this too will also reduce systemic risk to prevent conflict of interest and promote fair competition, among operators. The cross-border provisions too further safeguard Nigerian policyholders while ensuring reciprocity within the insurance market, while strengthening our long-term stability. My final thought: the Nigerian Insurance Industry Reform Act is not something that we should just see as a regulatory reform. It's a transformational blueprint for our entire industry. It combines modernization, transparency, innovation, and stability. And it has also laid the foundation for our sector to be more trustworthy, inclusive, and globally competitive, ultimately serving both policyholders and the broader economy. Let's take advantage of these opportunities that is before us. And I can bet you, before the end of this year, the industry will begin to sing new song. Thank you everyone for your attention. I'm happy to take your questions at this time. Thank you.
Thank you. Thank you very much, Mr. Jola. It's such an insightful one. So participants, it's time for question and answer. If you have any question, you can raise your hand virtually while we unmute you. Any question, please? Tosin. Unmute. Please unmute. Shan Oluwatosin. You have the floor, please. Okay, if he's not coming up, Isaiah Adeyemo, kindly unmute. All right.
Okay. Good afternoon.
Good afternoon, sir.
Good afternoon.
Actually, I enjoyed the lecture. It's very good. And then it is good that a lecture like this come time to time to strengthen and to enlighten agents. Of my own observation is just concerning the licensing boundary, which is, I think it is good at theory most other than practical, because that thing that they are saying that this composite is not doing well, is using the money from general to settle life, it will be a serious problem to the industry, because I think they could have just focused on the capital base, recapitalization base, so that if they have stronger capital base, it will not affect them, because companies are still struggling to survive, and maybe it was sustaining them, and then now they are removing the thing that like a soft landing for them has been removed. It's as if they are castrating the company. Although it is good to be specialized in a particular field, but for the company for the regulating authority to completely cancel it, it's like castrating the company, because in the longer run, we see that company will be folding up because they are not either able to meet up their obligation. When people are not buying into policy, it will affect them. I think it could have just been like recapitalizing, so that if they have that financial strong base, and then they can go ahead do it. Just like you as an individual, you have, let me say, 500,000 naira in your account, and then 450,000 is for, let me say, for your rent, though it is not due first, but the 50,000 that is with you is not enough. Since that rent, there is still time for you to pay it. You can still take from there and settle this one before the rent comes. You are able to sort it out. It's just a matter of common sense. But for the regulating authority to just remove that thing, I think it will be more tasking to the company to survive. Although it is good for specialization and all the rest, but I think it will cause serious friction in the industry. That's just my question. Thank you.
Okay, thank you very much, Isaiah. Let me quickly address your let's say concern now. But I need to first correct an impression. It is not the regulator that removed it. The act is a product of the National Assembly, which was also assented to by the President of the Federal Republic of India. NICOM is only to enforce. But be that what it may, you see, there are some things that we might not really get to understand, sometimes, because when you are running business, you are supposed to be able to ascertain how the business is doing at any particular point in time. The business you set up, your income, your profitability must come from that core business and not from another arm of business. And it is because we've not also been able to develop professionalism to the very extent that we are supposed to get to. That's why you might be having those challenges, because of the fact that you're also trying to maybe maximize your profits. Somebody that is not as experienced, in one line of business, you're asking, that person to use that residual knowledge, to handle that. The way you do general business is the same way you're going to do life. It's a different risk entirely that you cannot even put side by side at all. So the experiences there is totally different. But I believe it's best for us as an industry. You're able to focus on what you know how to do best. If you are in life, you provide the necessary capital that is needed. You get professionals that are well grounded in that line of business. There's no way you are going to falter if you do the business the way it should be done. I can tell you what I encourage people and what I say to people is, even though there are reservations, is premised on the fact that those that are composite companies now, the financial implication is going to be for them by the time they're able to comply with the law. But the law does not allow for the commission to issue composite license anymore. So we are not going to have that any at all. It's only to just give some, breathing space for those within that, the how those two licenses in one, to be able to, see how they can, survive the financial implications and be able to comply with the law. But I can tell you for free, I think it's one of the best things that's happened to us in this country. Thank you.
Thank you so much for that response. Adefunke, we don't want to be gender biased, so the lady goes next. Adefunke Oye Gigi, kindly unmute. Okay. Shanu, are you ready now? Shanu Oluwaseuntosin. Okay. Olatunbosun, you have the floor.
Good afternoon, ma'am.
Good afternoon, sir.
My name is Shanu Oluwaseuntosin from NEM Insurance PLC.
Okay, please go ahead.
Please, I have a question on this Takafu issue. Say, according to the facilitator, he said Takafu is an Islamic side of the insurance business that is being practiced, not the way the conventional something is being practiced. So my question goes thus: is the Takafu meant for only the Islamic ones, or what is the difference between the Takafu insurance and the conventional insurance? Let us get it clear. Because when you are marketing, in the process of marketing now, some people say Takafu, they may ask you such a question that, is it meant for only the Islamic, we are going to market Takafu for the only Islamic religion, or you can market alongside with the conventional? And what is the difference? What makes them different? What makes Takafu different from the conventional insurance? Thank you very much.
Okay, thank you very much, Shanu Oluwaseun, for your question. Let me first talk about the differences. Takafu is not a different class of insurance business. It's just a different type of insurance. Because what you have under Takafu is still the same under the same classification of life, non-life, and this issue of miscellaneous and digital inclusions. You have the same thing. But the major difference is, one, is the capital requirement that you need to have for you to set up a Takafu insurance company. It's different from the conventional insurance. And that is why they have limits to the kind of businesses that they can underwrite. But where the issue of Islamic comes in is that it's as an insurance business whose concept is drawn to align with Islamic principles. In Islam, the issue of someone making profits, collecting interest, and all that from transactions such as this does not arise. And so if you do your insurance and at the end of the year, there is no claim, you didn't make a claim, and there's some kind of surplus, that's why they don't use the word profit. There's a kind of surplus, which is after collecting your premium, they remove their operation expenses and all that, and they still have a surplus. It is shared between the Takafu insurance company and the policyholder. So that is just where the concept comes from. But it is not that it is targeted or is done specially for those that practice Islam. No, anybody can do it. I have quite a number of people that their own insurance is Takafu. And what is the value proposition for them? Because of the fact that they are going to share bonus at the end of each policy year, which makes a whole lot of meaning to them. So as an agent, if you are marketing it, you do it to everyone, every customer. If I'm interested, I'll buy. The only thing is just that for those that are so strong and strongly inclined to their faith, of, Christianity and the likes, or those that have bias for Islam, they may feel, okay, it is Islamic, but it's not really that it is Islamic. It's just the concept. It took something from the Islamic religion in building up that business concept. That's just what it is. It has nothing to do basically with Islam, as the case may be. Although the proponents, those that founded it, that they are people of the Islamic faith. But I tell you, you can market it to anybody. Anyone that has that value proposition will rather do with Takaful than the conventional insurance companies. The only challenge is just that the level of risk that they can underwrite is less than what the conventional insurance companies would do. I hope I've answered your question.
Thank you very much, faculty. Mr. Shanu, to have more in-depth knowledge in that Takaful training, thank God the college is going to organize a 2-day specialized training in collaboration with Pan-African Islamic Finance Advisors. They are international company, and it's coming up on the 11th and 12th of February, so you can be part of it. And I'm using this opportunity to invite any other participant that is interested in that regard to learn more. Thank you very much. So the last question for today, for this section, I'm going to accept Olatunbo Oshuntubo. I'm sorry for murdering that name. Olatunbo Oshuntubo. Kindly unmute. Okay. Since he is not talking, can we accept Chukuyem Williams? Chukuyem, you have the floor.
Hello, can you hear me?
Yes, please.
I can hear you. Thank you very much.
Hello, can you hear me?
My name is... Yes, I can hear you.
All right, let's go on.
Hello.
Yeah, we can hear you.
Okay. Yes, I'm Williams from S-Life. So in the
Okay.
beginning of your lecture, sir, you made mention of the...
Please go on, we can hear you.
to restore public confidence. And you said there were laws that weakened investors' confidence, but you didn't mention those laws that weaken investors' confidence. So, sir, I would like you to throw more light on that, or shed more light on that. And secondly, you talk about agriculture, that insurance need to look into agriculture. So I don't really get that in terms of, because I believe that the agricultural people, what they need is information on, about their crops and all that. So I want you to shed more light on how insurance company can, help agriculture. Thank you, sir.
All right, thank you. So I'll start with the first question, which is on the investors' confidence. The last time before 2025, this year, the last time the insurance law was reviewed was the Insurance Act of 2003, which was about 22 years old. And so you can imagine a lot of things that has actually transpired along those lines. Secondly, the return on investments. Anyone that is investing, particularly foreign investors, they all have their own threshold of the minimum expectations in terms of return on investment that they are going to have. When you look at insurance companies, you could really do a research. Maybe in the last 10 years, how many of our companies even pay dividend, to their shareholders? And for those that did, how much is the return? Because when you even look at it, most of our insurance businesses, where they get the chunk of their profit is actually even from investment income. If you're someone that is versed in the financials, you can fact check me. It's basically from the investment income. They are not making that money that they're supposed to do in the core business of insurance. And it is because the law, which is the existing laws that we have, before NIRA consolidated everything, together and did some improvements, does not really allow, operators to be able to play as much as they should. Even on the issue of investment that I talked about, the investment outlets is also limited. Insurance companies could have earned more, even in terms of their investment placement, but they cannot because the law restricts them. So any investor that wants to come into the market to play will look at all those things. If I put in money here, what do I expect? How much do I expect the company to grow in terms of revenue, in terms of insurance sales? What is the projection for loss? What is for investment? At the end of the day, taking out all those expenses, what am I going to have at the end of the day? It's going to be a major issue. And that is why investors are not really coming in. But with the advent of NIRA now, that has, simplified some of those processes, you can even see that even though we just started implementation, there have been, attempts for incursions by even countries coming into our market because the opportunities are there. So that is where the issue of, investors' confidence comes in. But when you now talk about agri is one of the major sector that is contributing significantly to our GDP. But to what level are we operating or providing insurance to that space? NAIC is the main insurance company, is the insurance company that is mainly in agri insurance products. How much revenue have they even been able to generate in that market? Still not substantial based on the volume of businesses that we're doing. And the market is there because year in, year out, farmers are suffering losses. And this agri business is done basically by those in the rural areas, of which our presence is not being felt as it should. So there's need for us to reach out. These are the people who say they're underserved. We need to bring them in. We need to think out of the box to come up with products that will meet their needs, that will meet their expectations. And I can bet you that product line alone can give us a premium that is on less than 1 trillion naira in a year. We're just still scratching the surface. But I believe we will be there if we all commit ourselves, to what NIRA seeks to achieve. I hope I answered your question.
All right, thank you very much. Permit me to take the last question, and that was the participant that just lowered his hand. Please, if you just lower your hand, can you raise it now? Okay, not you. Apologies. He was supposed to speak earlier, but okay. That means maybe you must have answered his concern. So, Abdulaziz, please unmute. Abdulaziz Aremu. Unmute. You have the floor.
Good afternoon, ma'am.
Good afternoon, sir.
Yes, ma'am. My name
Please
is
ask your question.
Hello.
Yeah, we can hear you.
I'm from Jai Staff Insurance.
Okay, good one.
All right. Please, can you enlighten us more on Traveler on how to insure on a yearly basis?
You need to be
Sorry, I
audible.
didn't get that.
Pardon?
I didn't get what you said.
Can you enlighten us on Traveler who travel on yearly basis, e.g. those who went to pilgrimage or Jerusalem, on how to convince them on their journey, sir? Because
Like
all
a
of them
travel
will be
insurance.
Hello? On how to convince them. Hello?
Okay. Okay, if I get your question, let me repeat it so that you just clarify if I get your questions right. It's about people that travel out of the country and then the need for them to have travel insurance.
Yes, sir. Yes, sir.
Okay, that's fantastic. Okay, well, there's no doubt insurance is a hard sell, and when you now put in the fact that some of us, most Nigerians are they are faith inclined. It's difficult for them to accept of certain things that this is just the reality of life. And so if you are not a professional person or you have a better understanding about life, you may just tend to think along those lines because people always want to learn from their experience. But I think what I would advise that you do is not to come from or should I say, you should come from the angle of the value proposition in it, and not starting with the issue of the fact that the worst may happen, which is death, because we're in Africa. There's a word that we use for us. Somehow we don't like anything that has to do with death and all that. I keep hearing, I bind it, I reject it, and all that. So you don't look at that. What are the other benefits that they stand to benefit? You can look at the loss of, their luggages or baggage, as the case may be. What are the benefits? Because that does happen. Okay, you can look at the health aspects. You could fall sick. You need to go to hospital, and you didn't prepare for that, and sickness comes. What do? You just paint some interesting scenarios that it will be difficult for them to resist, and finally back it up with a premium payable, because some people feel insurance is expensive and it is not. Those that spend 5-6 million, going to Mecca or going to Jerusalem, should not find it difficult to pay premium of between 30 and 60 or 70,000, as the case may be, depending on the duration that the person will stay abroad. But some of them don't know. So we also need to, emphasize on what the person is going to pay in consideration for the benefit. So you try as much as possible to draw, a line between what they are going to part with and what they are likely going to gain should, that risk crystallizes. Do you understand what I'm saying? That's the area where I advise that you take into consideration. But before I round up, since they said this is the last question, I saw a question on the platform where somebody asked, in case of Bayelsa State, whether it is appropriate for the state to have one insurer. No, I'll tell you that it's a no. We've gotten quite a number of complaints, from people, and even from insurance companies as well, brokers as well, and which the NI is working around. We are trying to, because there's no way, there's no law that permits even the state governments to say this is the only insurance company they are going to deal with. We are talking of compulsory insurance. If it is insuring the assets of Bayelsa State, yes, they can decide to say, okay, it's ABC Limited they want to deal with. But if it is for the citizens of Bayelsa State that wants to do insurance, they cannot compel them to do it with a particular insurance company. And like I tell you, we are taking it up with all those states. You will see more of this, as we progress in the year. There are conversations with some of them, and they've stopped. I can also say to you that sometimes it's not even the fault of those state governments. Is some of our people too, some of our member companies that go out there to negotiate for some interesting contracts that it's not good enough, for our industry. But the NI is up to the task, and then we'll address that. Someone wrote on the chat box, what is the penalty of NIRA on is it African Alliance? No, sorry, whoever wrote this, can you please just unmute yourself and give clarity so that I'll be able to answer your question? I don't seem to understand what you are trying to put out there. I think it's Olatunbo soon or so. If you are still there.
Aishat, please unmute. You have the floor.
So let me just take
Aishat,
this last question. I know our time is up.
Aishat, please unmute. Aishat Oleojo Kadiri.
I've unmuted.
All right, ma'am.
Good afternoon, ma'am.
Good afternoon, madam.
Good afternoon, sir.
Yeah, good
My
afternoon.
question is that, I worked with African Alliance before joining this my current organization, and we have clients there that have not been paid for years, and these clients are disturbing us. We are tired. We learned that Nikon has taken over the organization, but since I think it's getting to 2 years now, but nothing is happening. So since knowing about this NIRA being what is their what I'm saying that how can they help us to maybe sanction African Alliance so that they will pay clients their money? That's my question, sir. I don't know their.
Okay, thank you very
Hello,
much.
sir. Yes.
Hello. Yeah, I got your
Yes,
question,
sir.
Madam Aishat. I got your question.
Thank you.
You see, this is part of the things that NIRA is trying to address. I I talked about the issue of stricter regulation, and I also talked about the increase in minimum capital requirement and the risk-based capital. So if enforcement comes in, we are not going to have this kind of experience, this African Alliance experience again in our industry. But to address your concern, which is, specified to African Alliance, yes, I'm aware NICOM has taken over the management, and I'm also aware that a lot of things is happening. The company has been paying down, particularly for those that are on annuity. And the interesting thing is that more things are coming on board for the company in terms of money to be able to resuscitate the company so that they can be alive again. There's a report that came out last year, which I can say I confirmed to an extent. I mean, they sold one of their investments, to be able to get a large chunk of money for them to be able to meet those liabilities, which I don't know if they've gotten the revenue with regards to that. But I would advise you that as the agent of the insured, you should still go to the company, to find out about what is going on there, so that if they started paying those that they are owing, you can quickly, slot in your own, clients, so that they don't lose out, from this entire arrangement. Okay.
All right, thank you very much, sir, for your time. We appreciate your wealth of knowledge. It's indeed an insightful one. Thank you very much, and we look forward to having you some other time in our future trainings.
You're welcome.
Participants, we've come to the end of this session. So the next one will be coming up by 3 p.m. But before then, I would like to address the fact that quite all right, the NAIRA Act is new, and we have the document for everyone. It will be sent to your email address. Secondly, for the presentations, you're going to have it uploaded on the NICOM portal, and that will be the material that you're going to be using for your assessment henceforth. And thirdly, for refreshing your knowledge, it will be uploaded on our YouTube channel. I think that address your concerns. I need a yes, no, yes, no. All right, thank you very much. On that note, we've come to the end of this session and look forward to having you by 3 p.m. for the next session. Thank you, everyone.
Thank you everyone, and bye for now.